2022 will likely be a strong income year for most farmers and ranchers, which means many are looking for ways to save on their taxes before the end of the year. We have some recommendations from the farm CPA, Paul Neiffer. His year-end tax planning tips include exercising a deferred payment contract where a farmer sells grain now and collects payment after the first of the new year. He says farmers can pay next year's land rent before year-end and deduct it in 2022. Another suggestion is prepaying for inputs for the next season.
You have to have an invoice that shows a specified product, a quantity, and a price per quantity, and then an extension. You can't simply just cut a check to the local input dealership for $50,000 and have no detail on that.
Plus, farmers can use bonus depreciation on farm equipment purchases, which are 100% deductible, but that machinery must be delivered before year end.
However, technically, that equipment does need to be delivered. You can't simply have an invoice and cut a check. That equipment has to be available for use. Doesn't mean they have to take it out in the field, but they do need to have that vehicle. So that's definitely something that farmers are doing.
And farmers can look at farm income averaging.
Let's say they spike their income this year up to $500,000. In the last few years, they've been at that $0 or $50,000 level. Well, we get to spread that $500,000 as if they paid it over the last 3 years plus this year. So instead of being in that high tax bracket, they're actually going to be maybe in at most a 22% tax bracket.
Neiffer cautions producers not to get their taxes down too low this year, especially if they might have a strong income year again in 2023. He says spreading income out over a couple of years is a much better strategy.